Good morning, it's Jonathan Barratt with this week's Market Buzz. Okay, last week US equities edged out a small gain, pretty much against the trend which we wanted, but that was on some progress and some resolution of the government shutdown. As we know, the shutdown is in its 36th day, which is a record. Thank you very much, Mr. President Trump. And also we know that the government shutdown is actually causing a major rift in consumer confidence. And the University of Michigan confidence number came out at 50.3, which showed the second worst reading on record. Things aren't looking that good. Also, Challenger employment report reflected a 20-year high in job cuts in October. Now, whether that's people thinking the shutdown will continue or this is a consequence. We will have a bigger, deeper dive into the shutdown and as to the costs further on in the clip. Also, total US household debt rose to a record level, 18.59 trillion. That is a little bit of a problem there, and we will talk a little bit more about that. And also, in Australia, no change on rate cuts. Rate last week, RBA kept rates at 3.6%. Okay, so let's have a little bit deeper dive. I mean, in this market buzz, we're going to talk a little about, basically a little bit about the shutdown, how much it's costing the US economy. Also, we're going to focus on the debt, the household debt, and also the government debt, because I think it's quite important that we get a rounded view, because whichever way we look at it, it's still going to be quite negative. But anyway, let's see what happens. Okay, so let's now look at, the government shutdown. We are hoping that it will be resolved this week. We do get a sense that the market is starting to get nervous by it. And that to me is more of an issue. So any sign that there's a bit of positiveness there will support the market. For how long, I don't really know. But on the face of it, approximately 1.4 million Fed employees are either unpaid or have been released. And you've also got released without pay, You've got 42 million people, that's 42 million people who are waiting food assistance benefits. And outside that, look at all the airlines. 3.2 million airline passengers apparently affected because the traffic controllers aren't getting paid, they're not coming into work. So we expect that all to be a bit of a concern, but at the end of the day, it's costing US $14 billion so far. Now that's a lot of money. And in an economy that's certainly debted, that's going to have to be found. Now, when you look at it, the main reasons we've got, you can get a sense that the Republicans and the Democrats talking about the healthcare concerns, those sorts of issues. I do think that they will come up with a bill that will be passed by Trump. Trump will try and delay it because I certainly feel that Trump's there to try and consolidate his power base. And that to me is an issue that we've also got to deal with because he's really got no reason to want to come together on it, even though it's costing the economy a lot of money. But I think that the core problem that we're going to see developing in the States, not like any other country in the world, is the problem with debt. And when you look at it, debt is a big issue. And within Congress, they will approve the budget, but that will be probably by pushing the debt ceiling higher. And the debt ceiling higher, when that goes higher, it sort of means the government debt will increase. And I think it will. In fact, I think they're in a debit trap or a liquidity trap because it is an issue. Also, we've got household debt has also increased dramatically as well. And I think the two twin debt situation is an issue which they're going to find it very hard to get out. And I actually think that might cause more of a concern in equity markets down the track, because if you get just a slight bit of inflationary concerns, the cost of funding, whether it's household debt or government debt, goes up. And to me, that's the big thing. I mean, when you look at it, household debt, the United States rose by 197 billion in the third quarter, 2025, and that reached a record level. As the household debt reached a record level of 18.59 trillion. Now that's a big concern because when interest rates start to move up because of anything, mainly inflationary, or when the Fed decides to tighten monetary policy, then that comes into play. People won't have the extra money to actually spend. So that's one of the debts. Now, the other debt we've talked about is obviously the government debt. Now, with the budget, pushes the government debt. Now, the government debt's also on a record level, and that seems to be, it'll just continue to push higher and higher. Now, that's approximately 1.216 billion. That's for the last financial year ending September 25. That's the highest in American history as well. And it does represent a dramatic cost, in terms of trying to service this debt. And when you look at it, the amount of money, in the US, so it was in 2023, it was the financing costs alone cost about $1 trillion. We know that it's more than doubled, as we speak today. So that is a major concern. And I think, if anything, that's something the market will focus on. Just to put it into perspective as well, the amount of money that the US taxpayer is spending on interest payments is more than the national defence by itself, Medicare by itself, and any discretionary non-defence spending programs. So when you look at it, it's a drag on the economy, and it will be with them until they actually address it. And that, to me, is one of the biggest problems that you'll have. And if anything, that'll be probably a bit more of the undoing over time of the US as the lead economy. And to me, that is something that is a major concern, because as soon as you get just, more interest rates moving higher, then this debt will then become worse and worse. So if you think that the inflationary expectations going out 3, 4 and 5 years are about 1.5% above what the Fed wants, then this is the funding cost that they're going to have to look at. And to me, that is a significant issue. And I do think that, if anything, if they don't resolve this sooner rather than later, and there's no reason why equity markets should go up if, in fact, they resolve the problem. Because resolving the problem will just be pushing the debt ceiling higher and higher. And that, to me, is absolutely crazy. But they are in this debt cycle. So it's a very complicated thing to look at, but in my mind, it's still an issue. Now, this week is going to be interesting because of that, to see what happens, but we haven't got a lot of data out, purely because people are employed to do it. So we won't get much by way of economic numbers. Although we weren't to get national, we were meant to get non-farm payrolls last week. We didn't get it, but when you look at it, ADP employment figures, just so basically things are a bit of concern. But we're going to get those ADP this week, so that'll give us a bit of an idea of what actually is happening in the employment area. And we're quite happy being long gold. I do actually feel that, let me just get some cursor up. I do actually feel that we've got this correction has been underway for some time, and I do like it. We've come a little bit of pullback to here, that 38,500, 38.90, and now we've got a test to the top side. You can see it better when you look at the hourly chart, and you can see here just a little bit of a lift here. I actually think this correction, we'll see it back up to around that 4,100, maybe even beyond that. But I do like this breach, pullback, follow through to come. So quite bullish on gold. We are long, and we have actually added to the positions because we feel that the price of gold will go higher. There's no real reason why it shouldn't go higher. So let's have a look at that. And I think gold's quite a good trade. Same with silver. Silver's had a bit of a spurt as well. As you can see, this consolidation here, a test to the high, either a test to the record high to say that it's going to go onwards and upwards, or we come back for a deeper correction. But either way, we're right in the middle of where the market should be, or where it should actually trade to. And I'll just get back to see that on the hourly. Same things, pretty similar as to what gold's doing. But I do like this breach and pullback. I do like this breach, pullback, consolidate, and then back up again. So, and it'll either test here to go higher, or we form a double top and actually comes back to consolidate forward. Okay, so that's that. Let's have a look at the Aussie. We're long Aussie as well. And I think when you look at the Aussie, momentum indicators are pretty mixed, not too much to see on that side. There we go, just try and move this down a bit. There we go, just try and get that a little bit so you can see what I'm looking at. There we go. And when you do look at that, I get a sense that, we've been lower here. Momentum studies are looking good, so I wouldn't be surprised to test a little bit higher. Just back up to that range, 65.90, 66. But it breaks through 66, 10, 20. It's off to the races. So I really like that trade if it continues to trade. But that's about it from me. I hope everyone has a good week's trading, and we'll talk to you soon. Bye for now.